You might have opened your mailbox or maybe your email inbox recently and seen a tax form specifically, a Form 1099-K.
Yeah, maybe from Venmo, PayPal, CashApp, one of those
Yeah,
platforms you use.
exactly. Or perhaps you're kind of expecting one because you get paid for goods or, services through them. If that sounds familiar, then stick around.
Because in this deep dive, we're going to unpack the recent changes to the Form 1099-K tax reporting rules.
Right.
We've looked at a whole range of sources, bank rate, Cash App support, found the IRS itself, of course.
Okay.
Also discussions on Reddit, the Taxpayer Advocate Service, CPA Practice Advisor, and Jackson Hewitt.
Okay, so quite a bit of ground covered. So the big question is, what are we trying to figure out here? Our mission today is really to get to the bottom of what this Form 1099-K is all about.
Yeah, like who's actually likely to receive one under these new rules?
And what do you do if you get one? What does it mean for your taxes?
Yeah.
Especially, if you're running a side gig or selling stuff online. So let's start with the absolute basics. What exactly is a Form 1099-K?
Okay, so think of it as basically a summary report. It shows payments you've received for goods and services throughout the year.
Okay.
And these payments can come from various places, credit card processors, those payment apps we all use.
Like Venmo, PayPal, CashApp,
Yeah,
the usual suspects.
exactly. And online marketplaces too. So if you're a freelancer getting paid through an app or an online seller, this form could be heading your way.
Gotcha. But there's one app, Zelle, that you mentioned doesn't quite fit in the same box, right? Why is that?
Yeah, that's right. Zelle, it operates a bit differently. It basically just facilitates direct transfers between bank accounts.
Oh,
It doesn't hold the money itself. So because of that direct bank-to-bank thing, it's not subject to the same 1099-K reporting requirements as, say, PayPal or Venmo, which act more like third-party settlement organizations.
interesting distinction. So if Zelle is your go-to, you probably won't see a 1099-K from them.
Generally, no.
Okay. Now, if someone is expecting a 1099-K, when should they look for it?
Well, the legal deadline for these forms to be sent out to taxpayers is January 31st of the year after the tax year.
Right.
So for income earned in 2024 that triggers a 1099-K, you should have received that form by the end of January 2025.
And it's really crucial to understand what kind of numbers you'll see on this form.
Yeah.
It reports the total amount, the gross amount, right? What does that mean practically?
It means the figure on the 1099-K, it doesn't reflect any fees the platform might have charged you
Oh, okay.
or any money you might have refunded to customers, for example. It's the total incoming amount before any of those adjustments.
So it's like the top line number.
Exactly, just a top-level view of your earnings through those channels. Now, let's get to the part that's really, causing a stir. The new rules about when a 1099-K actually gets issued. What's the key change we need to know about?
The big news, yeah, is a significant drop in the threshold. For the 2024 tax year, if you receive $5,000 or more in total payments for goods and services through these platforms, you should get a form.
And that's a big change. To really appreciate it, think about the old rules.
Right.
Before 2024, a 1099-K only had to be sent if you received like a whopping $20,000 or more,
Wow.
and you had over 200 separate transactions.
Okay, so two conditions there.
Two conditions, yeah. So we've gone from a pretty high bar, 20K and 200 transactions, down to just $5,000. And the number of transactions doesn't even matter anymore for the federal rule.
Okay, so $5,000 is the number for 2024. But this isn't staying put, is it? It's changing again. What's the plan?
That's right. It's actually a phased reduction. So 2023 and earlier, like we said, 20K and 200 plus then. For 2024, it's $5,000 plus. Then for 2025, the plan is to drop it further to $2,500.
Okay, another step down.
And then looking ahead to 2026 and beyond, the plan is for a much lower threshold of just $600.
Wow, $600. That's going to capture a lot more people, sure.
No, absolutely.
Where did this push for lower thresholds even come from?
Well, this change actually originated with the American Rescue Plan Act, ARPA, which passed back in 2021.
Yeah.
It was originally meant to take effect sooner, but the IRS actually delayed implementing these lower requirements for both 2022 and 2023.
Why the delay?
Well, it gave payment processors more time to, update their systems and hopefully reduce some of the potential confusion for taxpayers. It was a big shift.
That makes sense. A logistical hurdle for them, I imagine. But here's a really, really important point for everyone listening. even if you don't meet these specific 1099K thresholds, your tax obligations don't just disappear, do they?
Not at all, no. Whether you get a Form 1099-K or not, you are still legally required to report all of your taxable income to the IRS.
Okay.
The 1099-K is really just an informational tool. It helps you and the IRS keep track of payments. It doesn't create a new tax. It's just a record of income you already should be reporting.
Got it. So given this new $5,000 threshold for 2024, who are the people most likely to find a 1099K landing in their mailbox or inbox this year?
Well, the main group is going to be individuals selling goods, providing services, maybe even renting out property through these apps and online marketplaces,
Right.
and whose total payments hit or went over that $5,000 mark.
So that covers a lot of ground.
It really does. Freelancers, gig workers, small business owners, online sellers of all sorts, even people just with regular side hustles.
So basically, if you're using these platforms for anything more than just, sending birthday money to your nephew or splitting dinner with friends, this is something you need to pay attention to.
Definitely.
And it's not just the federal rules we need to worry about, is it? You mentioned some states have their own thing going on.
That's a really critical point, yeah. While the federal threshold for 24 is $5,000, several states have set up their own, often lower, reporting requirements, specifically for CashApp in these cases.
Okay, like where?
For instance, D.C., Maryland, Massachusetts, Vermont, and Virginia, their threshold is just $600 or more.
Wow, $600 already in those states for CashApp.
For CashApp, yeah.
Yes.
Illinois is over $1,000 and more than 3 transactions, and Missouri is $1,200 or more.
Okay.
So even if your total CashApp payments for goods and services were, say, $4,000 below the federal limit, you might still get a 1099K if you live in one of those states and meet their criteria.
That's a really important detail that could easily catch people out, those state-specific rules. Now, what about this scenario? Someone used to have a Cash App business account that met the threshold, but then they switched it to a personal account. Would they still get a 1099K?
Yes, it's very likely they would. According to Cash App's guidance, if your business account met that $5,000 threshold at any point during 2024,
At any point.
even if you later switched it to personal, you'll probably still get a Form 1099K. The IRS looks at the total activity within the calendar year.
Regardless of the account type at the end of the year. Okay, another good nuance. Now, let's say someone actually gets a 1099K, but something looks off. Maybe it includes personal payments like reimbursements from friends.
Right, things that aren't actually income.
Exactly. How should they handle an incorrect 1099K?
This is a common worry, and it's important to deal with it. If your 1099K includes those personal payments, reimbursements, gifts, whatever that money generally isn't taxable income.
Okay.
So your first step should be to immediately contact the company that issued the form, Venmo, PayPal, Cash App, whoever it was.
And ask them.
Ask them to issue a corrected form. They should be able to verify those non-business transactions and send you a revised 1099K with the correct amount.
But what if you can't get that corrected form quickly, like the tax deadline is looming?
Yeah, that can happen. In that situation, the advice from the IRS and tax pros is usually to go ahead and file your return using the numbers on the incorrect form you received. But you then need to make an offsetting adjustment on your return to essentially cancel out the non-taxable amounts that were wrongly included.
How do you do that?
It's typically done on Schedule 1 of Form 1040. You report the income as shown on the 1099K, but then you clearly show a deduction or adjustment for the same amount, labeling it something like 1099K received in error for non-taxable payments.
Okay, that sounds a little bit involved, but doable. Is there anything people can do proactively, throughout the year to maybe minimize the risk of getting an incorrect form in the first place?
Absolutely. The best thing, honestly, if you use these apps for both personal and business stuff, keep them separate.
Like have 2 different accounts?
Exactly. Have one account just for business transactions and another purely for personal use. Both the IRS and the platforms themselves recommend this.
Okay.
It just makes tracking your business income so much cleaner and drastically reduces the chance of personal payments getting mixed in and ending up on a 1099K.
That makes total sense.
And, beyond separate accounts, just keeping good records, even a simple spreadsheet, or maybe using accounting software like QuickBooks Online if your business is a bit more complex. Just tracking what's business and what's personal is key.
Separate accounts and good records.
Yeah.
Sounds like solid advice. So let's assume you get a correct 1099K for your business income. How do you actually report that on your tax return?
Right. So remember, the 1099K shows the gross payments. That's the starting point.
Okay.
But But that gross amount isn't necessarily your taxable income. You need to figure out your net income.
By subtracting expenses.
Exactly. You subtract any legitimate business expenses related to earning that income. Think about supplies you bought, software subscriptions for your business, maybe platform fees.
Right, the fees the apps charge.
Yeah, those can add up. All those things can reduce your taxable income.
Okay. Now, what about those situations where the 1099K might include payments for selling personal items, like you sold an old couch or some clothes online? How is that handled?
Good question. It really depends on whether you sold those personal items at a loss or for a profit.
Okay, let's take the loss scenario first. Sold it for less than you paid.
If you sold it for less than your original cost, so you took a loss, you basically just offset that income on your return. You'd report the payment from the 1099K, maybe on Schedule 1, like we mentioned, for errors.
Mm-hmm.
But then you'd make an adjustment to bring that specific portion down to zero. You generally can't deduct a loss on selling personal stuff, but the key is you don't pay tax on it because you didn't actually make any profit.
So you report it, but zero it out effectively.
Pretty much. You could also report the sale on Form 8949, which is for sales of capital assets, just to clearly document the cost basis and the loss.
Okay. What if you actually made money?
Yeah.
Sold something for more than you originally paid?
Ah, okay. In that case, the difference between your selling price and what you originally paid, your cost basis, is considered a capital gain.
And that's taxable.
Yes, that profit is taxable. It should be reported on Forms 8949 and then carried over to Schedule D of Form 1040, which summarizes your capital gains and losses.
So keeping records of what you paid for things, especially valuable personal items, could be important there.
Absolutely, especially if you sell collectibles, antiques, things like that.
Got it. And for the maybe more typical case, income from actually selling goods you make or providing services, where does that usually go?
That kind of income generally gets reported on Schedule C of Form 1040. That's the form for profit or loss from business.
Okay.
So freelancers, gig workers, sole proprietors, that's usually their main spot for reporting earnings and deducting those business expenses we talked about.
And if it was rental income?
If the income was specifically from renting out property, like through an online platform,
Right.
that would typically go on Schedule E instead. So the type of income dictates the right form or schedule.
It really seems like the constant theme here is just keeping good, accurate records all year long.
Absolutely, 100%. Keeping detailed records of all your income, and just as importantly, all your expenses related to that income is crucial. Doesn't matter if you get a 1099K or not.
Right.
It just makes calculating your actual taxable income so much easier when tax time rolls around. And, if you're feeling unsure about any of this, how to handle the 1099K, tracking expenses, which schedule to use, especially if this is new territory for you,
Yeah.
it's always a smart move to think about talking to a qualified tax professional. They can give you personalized advice for your specific situation.
Good advice. Now, there are a couple of other sort of important points around the 1099K that we should probably touch on before we wrap up.
Yeah, definitely. First and foremost, it's really vital to remember the 1099K itself is not a tax bill.
Right. It's just information.
Exactly. It's an informational form reporting the gross payments processed. Your actual tax liability depends on your net income after expenses and, your overall tax picture.
And we've said it before, but it's so important, it's worth saying again, even if you don't get a 1099K, because maybe you were under the $5,000 threshold.
You still have to report all your taxable income.
That's the bottom line. You're still legally responsible for reporting everything you earn to the IRS. The thresholds are just triggers for the platforms to send the form.
Precisely. Also, with these forms becoming more common due to the lower thresholds, just be aware of potential scams.
Yeah, good point.
Be cautious about any unsolicited emails or calls asking for personal or financial info supposedly related to a 1099K. Only share sensitive details through fatal, secure channels you trust.
Definitely. Always be wary of potential scams. What about if a payment platform actually withholds taxes from your payments? Does that show up on the 1099K?
Yes, it can. If a third-party processor withholds taxes, this usually only happens if there's an issue, like you provided an incorrect or missing taxpayer ID number, TIN.
Okay.
That withheld amount will be reported in Box 4 of the Form 1099K.
And what do you do with that number?
When you file your tax return, you can claim that withheld amount as a credit against whatever tax you owe. It's like tax that's already been paid on your behalf.
Gotcha. And finally, it really seems like this whole shift in the 1099K rules has kind of taken some people by surprise, hasn't it?
It really has.
Yeah.
Surveys and online discussions show that a lot of folks, especially in the gig economy or maybe those just casually selling things online, weren't fully aware of these lower reporting requirements kicking in.
Yeah, I could see that.
And that could lead to some unexpected tax bills or just confusion when they file. As a result, you hear about some people now thinking about hiring a tax pro for the first time,
Hmm.
or others maybe rethinking how they manage their work or payment methods to potentially stay under these thresholds in the future, although reporting is still required regardless.
So the big picture here is pretty clear then. The 1099-K reporting rules have changed significantly. And this is likely going to impact a much wider group of people using digital payment platforms for any kind of business stuff.
Absolutely. Understanding these updated rules is, well, it's more important than ever now, just to make sure your tax reporting is accurate and you avoid any potential headaches or penalties from the IRS later on.
So for you, the listener, it would probably be a really good idea to, take a look back at your 2024 payment activity. Check those platforms like Venmo, PayPal, CashApp. See if your total for goods and services hit that $5,000 threshold.
And remember those potential lower state specific rules, especially for CashApp.
Don't forget those.
And yeah, regardless of whether you expect a form or not, just make absolutely sure you are keeping detailed, organized records. All your income, all your related expenses for any online activities or side hustles.
Good records are your best friend here. So here's a final thought for you to consider. With that reporting threshold set to drop even further in the next couple of years, eventually down to that $600 mark,
Yeah, that $600 target.
how might that big shift influence the way you manage your finances and track income from these online platforms going forward? It's definitely something worth thinking about, maybe doing a bit more research on as we head into future tax seasons.
For sure. Preparation is key.
Thanks for taking this deep dive with us today.